You're listening to Ask the Expert on Sprott Money News.
Hello and welcome back to this month's Ask the Expert here on Sprott Money News. I'm your host, Jeff Rutherford, and on the line with me today we have Dr. Paul Craig Roberts. Dr. Paul Craig Roberts is an American economist and a columnist for Creators Syndicate. He served as an assistant secretary for the Treasury in the Reagan Administration and was noted as co-founder of Reaganomics. And with that, we'd like to welcome Dr. Paul Craig Roberts. Good morning, Paul. Thank you for joining us.
Thank you.
Well, firstly, Paul, I just want to say welcome. We've literally received a deluge of questions from our listeners, and I'd like to apologize to them firstly because just due to the length of the podcast, we won't be able to get to all the questions today. But in any event, hopefully, down the line, we'll be able to invite you back again as our guest, and we can get to the rest of those questions.
Sure.
Now, let's take a look at our first question. With the impending doom of the U.S. fiat currency and the fact that most countries' currencies are backed by the U.S. currency, which currency would you recommend investors to make their investment purchases in?
I think that people need to be wary that the dollar could take a hit in foreign exchange markets if Russia and China and India and the BRICS, Brazil, South Africa, if they succeed in organizing their international payments in their own currencies and simply abandon the use of the dollar, because that would result in a drop in the demand for dollars in the foreign exchange markets. And unless Washington could use currency swaps with the Japanese and the Europeans to support the dollar by purchasing it, and they might be able to do that for a short period. You will see a decline in the dollar. In the meantime, the growth of use of other currencies could be disrupted by Washington and Wall Street and London by shorting those currencies in foreign exchange markets, or destabilizing the currencies by sending in capital inflows, driving them up, yanking the capital inflows out, driving them down, like happened to Asia in the late 90s. So the outcome of this will take a while longer, but I think that the dollar as world money, that role is over, effectively ended by two things. One, the massive policy of quantitative easing, in which so many trillions of new dollars were created in order to support bond prices. And then on top of that, the application of sanctions, first to Iran, an oil producer, and then to Russia, because the sanctions applied to Russia have resulted in essentially Russia moving much of its energy outside the dollar system, and so other energy producers are likely to follow that. So the dollar's time is about up, but it could continue for several more years.
So with that being said, I mean, are we saying that, in other words, we've heard what's happening with the dollar. So would it make sense to continue using the dollar for investments? Or again, as we're looking to the rise of, what's happening in China, would it make sense to look to China or Russia? What do you think would be the best choice as far as that's concerned?
For now, it depends on what investments you're going to make. That depends whether or not Washington is going to enter into a state of war or semi-war. Your investments in Russia and China could be seized, or they could be seized in retaliation to seizure of their investments by the United States. China has substantial investments in the United States. And so you can't really know what the outcome of American foreign policy will be. It's highly aggressive, highly antagonistic against Russia and also China. Yesterday at the UN, this fool in the White House declared Russia the second greatest enemy of humanity after the Ebola virus.
Simply absurd, isn't it? Wasn't it?
Yeah, there's no evidence anywhere for such an absurd statement, but essentially it's a warning that Washington intends conflict with Russia. Washington may hope just to keep it another Cold War in order to support the military security complex with taxpayer funding, some of which, of course, is always recycled into political contributions. Or Washington may be serious about provoking the war, because the Wolfowitz Doctrine says the primary purpose of American foreign policy is to prevent the rise of Russia. And so if they can't break up the Russian Federation without war, they may decide to use war. And the Russians have proved to be amazingly tolerant and unprovocative, and have shown massive restraint, but one never knows when they figure that they just can't put up with it any longer. So I don't think there's any safe haven or any clear choice anybody could make at this time about where to invest or what currency to invest in. The long and systematic attack on gold by the Federal Reserve and its bullion banks is one way they shield the value of the dollar, because the extraordinary rise in gold in the 21st century was a statement that there was no confidence in the dollar. So they've managed to suppress the gold price by all the naked short selling in the futures markets. And so even gold as a hedge is under attack. This attack may be wearing out, because gold seems to be departing the West for Asia, and the Asians have established their own gold exchange in which naked shorting is simply not possible. So the outcome of that is also waiting to see what happens. So for the moment, there's no real security for any investment. The bond market's a bubble, the stock market's a bubble, the dollar's a bubble. They're trying to talk real estate back, but it's still a bubble and will probably crash further soon. So I don't, and of course, the money in the banks, if it's in excess of the guaranteed FDIC amount, it'll be lost as part of the new regulations. So where can you put your money? People say, well, the ultimate safety is the Treasury bond, because the government can always repay your nominal investment by printing the money. And so the loss would be to inflation, but not to simply inability to pay. So there's no real answer to the question, Jeffrey. It's very uncertain and problematical time.
Understood. So kind of keeping in line with the geopolitical concepts right now that's happening in the world, do you see a geopolitical power shift resulting from the next U.S. financial crisis? If so, how do you see it unfolding, and how will power be redistributed?
Well, that's a very long, complicated question for this interview. But the basis of American power in the world essentially is the dollar as world reserve currency, because this lets the United States pay its bills by printing money. And also is the source of American financial hegemony. It's the reason the United States can sanction countries. And so anything that weakens or destroys that role weakens and destroys American power, and there's no way around it. And I do think that the abuse of the dollar by Washington and by the Federal Reserve is terminating the dollar as world reserve currency. In fact, I do not think a world reserve currency is any longer needed. The dollar assumed that role after World War II, when the only intact industrial economy in the entire world was the United States. And so essentially the United States is the only country that had a currency that could be backed by the production of goods and services. Mm-hmm. And therefore, if you had to make payment, then to have things linked to the dollar made sense, because it gave confidence in the payments of other countries. But today, you see, there are many developed countries. There are many alternative currencies. They're traded freely. And what is happening among the BRICS is that they are trading in their own currencies. They simply bypass the dollar, and of course it's much cheaper. The use of the dollar imposes foreign exchange commissions. So suppose you're China and you want to buy something from Japan. Well, you got to change your currency for dollars and pay a fee. And then you pay the Japanese in dollars, and then the Japanese want yen. They've got to exchange the dollars to yen and pay a fee. And if you don't have a reserve currency, you don't have these fees in these transactions. People just trade back and forth, and that's that. So I think the reason for reserve currencies no longer exist. And if they don't exist, then that adds to the departure from the dollar, to the fact that it's abused by money creation, by sanctions, by using it as a tool against perceived enemies. Essentially, Washington is driving other powerful countries such as China and Russia out of the dollar payment system.
Now, Paul, let's take a look at the power of big banks. With big banks manipulating the prices of precious metals with impunity and continuing to capitalize from this manipulation, why would this manipulation stop? Do you think the U.S. government will stop them? Will they close the future exchanges so they cannot continue this behavior?
Well, I don't think the United States government will stop it. I mean, by that you mean the Fed.
Right,
Federal
exactly.
Reserve won't stop it because it protects the dollar from quantitative easing. It protects the dollar from the Fed's now humongous balance sheet. It's gone since 2008. It's gone from about $800 billion to $4 trillion. And so the Fed, in my opinion, I can't prove it, but in my opinion, the Fed is behind the short selling on COMEX and London by the bullion banks. Now, the bullion banks make a lot of money out of it, because when they dump these naked shorts, always at inopportune times when there's no trading, and down goes the price. And once the price starts down, then all the stop-loss orders that the hedge funds have in there are triggered, margin calls, and so there's more selling. And so then the banks can step back in and buy up the cover for their contracts at a lower price than they sold. So they pocket the money, or they can simply accumulate blocks of shares, say from the GLD trust, in units of 100,000 and redeem them for the physical gold.
Right.
And then that produces a supply of gold to meet Asian demands. And usually there are premiums over the price of gold in the Asian markets. Sometimes the premiums are very high. Sometimes in Vietnam, the premiums are a couple of $100 an ounce. And this is usually because of limits on the imports, and so it encourages smuggling. So there are a lot of markets in which the banks can make money from redeeming the shares for gold and selling the gold, or they can simply buy the shares back at a price lower than they sold because they've triggered a market decline, and then cash them out and put the money in their pockets. So the banks make money doing this, and the Fed doesn't stop it. In fact, it encourages it because it protects the dollar from the Fed's policy. So I think it can continue until, say, the Shanghai Gold Exchange, in which no naked shorts are possible, produces different prices, different behavior, or until the West is so depleted of gold that the risk of selling all those naked shorts that can't be covered becomes too high. I mean, I keep wondering why Russia or China doesn't step into the COMEX and buy up every one of the naked shorts that the bullion banks drop into the market and hold them in demand delivery, because the bullion banks wouldn't be able to deliver. They have gold, and the whole damn system would come down. So I keep wondering what is wrong with Russia and China. Here they are putting up with all this nonsense from the United States, and they can collapse the system whenever they want to. Why don't they do it? Why don't they, if I was advising Putin, I'd say, next time these bullion banks dump all these shorts, buy every one of them. and then hold them for delivery, and the day of delivery demand delivery, and then the whole thing collapse. The market would collapse. The whole thing, it would be a madhouse. So I don't, unless Russia and China catch on and get some good advice or find some courage, this process can continue until it just becomes too risky, or until the whole Western-dominated gold futures market is displaced by the Chinese one.
Well, let's kind of stay in line there in talking about the Shanghai Gold Exchange. Do you think, sir, that when the newly opened Shanghai Gold Exchange, which quotes and settles in yuan, will provide any true price discovery on physical bullion?
Well, it remains to be seen, and the reason I say that is my understanding is that China is going to permit the Western bullion banks to participate, and clearly they will be trying to protect their control and to protect COMEX and the London Gold Exchange. And now, why is China doing this? Are they just naive and can't, or they just want to be accepted by the West, or I don't know. And so I don't know what capabilities the Western bullion banks participating in the Shanghai Gold Exchange might have, or be able to devise to control that exchange or disrupt it. I mean, I don't know. It remains to be seen. I haven't had any time to spend trying to game that and think it out, and it's pointless anyhow, because if they come up with something, they will.
Right.
And so we have to wait. That's why I said earlier in this conversation, we'll have to see how that develops. It has the potential of displacing London and New York. But if they invite in the villains may ruin that pie too. So I just don't really know. We have to see.
Fair enough, Paul. Now let's take a look at the average family. How are small middle-class families able to preserve any savings with no governmental safeguards for wealth protection, a failing fiat money system, and bullion outside the system is being eroded in some desperate game to hang on to the US dollar? What is a family to do except look to China or Russia for some credible stability?
Well, there's nothing they can do, and they can't look to those countries for stability because the United States intends to destabilize them. The Russian response, in my view, has been very weak. For example, if I was Putin, I wouldn't be putting up with this fool in the White House. I would call up each major European so-called leader. They're all American puppets, but I would call up and say, you know what, we've made a decision. We're not going to sell natural gas to members of NATO. In fact, I would wait another month or two. And this decision's effective in 1 hour. He would break NATO to pieces.
Right, you're right.
It would be the end of NATO. But he won't do it. Why? If Russia and China, which have powerful weapons to use against the United States, I don't mean nuclear weapons, I mean financial weapons, or the threat that I just told you, we don't sell natural gas to NATO members. If they won't use these kinds of weapons, then they're going to be destabilized by Washington. You know, Russia has a Muslim population, China has a Muslim population, the CIA funds the opposition in those Muslim populations, encourages them. Both Russia and China, I think the other day, signed on to the new American laws internationally to prevent the movement of Muslim terrorists. If Russia and China had any sense, they'd be backing ISIS, the Islamic State. They'd be giving them surface-to-air missiles so they could blow the American planes out of the sky. They come over to bomb, and boom, there goes the Air Force, it's blown away. But they don't. They don't. You know, the real way international politics has always operated is that the enemy of my enemy is my friend. Instead, Russia and China, in an act of total incompetence, have aligned with Washington against the Islamic State, whereas they could very easily use the Islamic State to defeat Washington. So what you see on parts of these two governments is that they don't seem to be able to comprehend the threat that the United States represents to them. If Putin and the Chinese leadership think that the Muslim state is a bigger threat to them than the United States, well, they're incompetent. they're more stupid than Obama. In other words, they don't seem to be able to comprehend that the United States is after them, and they don't seem to understand all the things they can do to defeat the United States without having a war with the United States. So I wouldn't say that either country represents any form of safety. And I think the desire to be part of the West has made both of these powerful countries semi-blind and semi-stupid. So that's just my opinion. I may change it if I see more promising signs of realization in China and Russia. I'm really puzzled about China because I was there some years ago and spoke to all the top leadership, and they were very much concerned about the United States and its aggressive position toward China. But they don't seem to be able to come to terms with it.
Again, let's take a look at China right now. I mean, there seems to be, maybe not within the upper levels of government, but a rising consciousness within the youth of China working to change the system. Even in Scotland, the Scottish referendum, we had a vote that was showing 75% of 16 to 17-year-olds wanted independence. So what advice can be given to those, between 18 and 30 years of age in regards to their financial future?
Well, they don't have one. Not in the West or in the United States. Now, China doesn't need the West. It has a massive internal market. It's the largest in the world. And just as the United States was able to be self-sufficient and have the highest incomes of the world for decade after decade based on its domestic market, China can easily do the same thing. And when I was there, they explained to me that the problem they faced was the farmers, or the peasants, who are now prosperous, won't spend any money because the Chinese one-child policy destroyed their traditional old age security, which was lots of kids. And the Chinese government told me that the only way around it was for China to devise an American-style Social Security system. And then the Chinese internal market could develop, because then the hundreds of millions of people would spend the money and not hold on to it for their old age protection, because they would have Social Security. So that was a consequence of the one-child policy, and they're fully aware of it. And I said, well, why did you have the policy? And they said, well, because we didn't have the resources to support both the development of the country and the massive infrastructure and education that would happen if every Chinese was having 3, 4, 5, 6, 7 children. We just had no way. I mean, there was absolutely no way we could have paid for bringing the children up and developing the country. And so that was why they had the policy. So I think that China doesn't need the West. They haven't been able to develop that market internally as quickly as they should have.
Now, let's kind of switch back over to precious metals for a moment, Paul. How can precious metals expect to become more valuable in deflationary periods when gold is not an official currency? Deflation
in what sense? You mean of assets? Bonds might deflate in stocks and real estate. But what is always the response to a Great Depression situation, or what has been, in modern terms, a response, is print money. And so the money creation will destroy or the collapse of the dollar. Because, if the dollar loses exchange value, the United States is now heavily import dependent. All the offshore production comes back into the country as imports. We're heavily import dependent. And so if the prices of the imports go up because the dollar loses exchange value, you've got massive inflation. You may have, in addition, massive inflation just from money creation. Or if all that money sitting in the excess reserves of the banking system, if that starts getting into the economy, you got massive inflation. So it's not simply deflation of all prices. That was the mistake of the Great Depression. They're not going to just have massive amounts unemployed people with no money. I mean, you would have total social instability. So they'll print it, and the consequence would be to destroy the fiat currency. So that's why gold and silver are hedges. If you just look at what's been happening, then you have to come to the conclusion you should have some hedge, because the money creation since 07, 08 has been fantastic. And not just for the United States, because I'm convinced that the United States put extreme pressure on its puppet state, Japan, and on the EU to print those currencies in order to support the dollar. You know, Japan's been printing money like crazy, right? That's my understanding. And
for decades at that.
Yeah, right. It's part of supporting the dollar to save it from QE. And then look what happened in Switzerland. There was such a flight from the euro and from the dollar into the Swiss franc that the Swiss government finally had to announce, well, look, henceforth, we're going to print new francs with which to accept the inflows of foreign currencies. And so they have fixed the price of the franc, and they don't let it rise anymore. And I think the American inflation of currency has forced every country to inflate in order to protect their export markets. Dollar is the world reserve currency, and things are priced in dollars, and the dollar is declining relative to other currencies because of the Fed's QE. Then everybody else's currency appreciates, and that's what was happening in Switzerland. And so in effect, the American policy forces everybody to inflate. So all the currencies are being inflated. Now, and even you see what the Chinese do. They have kind of pegged, they have a floating peg now, but they peg their currency to the dollar. So if the dollar inflates, the China has to. You know, who wants all this printed money? Certainly, goods and services in the United States since 2008 have not increased in proportion to the dollars that the Fed has created. And so what backs those dollars is not goods and services. And so the fact that prices haven't really gone up is because most of those dollars are locked up in bank reserves, where they earn interest from the Fed. The banks are holding on to them because I don't think they have any real idea of the extent of their derivative exposure. When you see that a single U.S. megabank has derivative exposure in excess of world gross domestic product, well, there's no way the bank can cover that. Mm-hmm. I mean, nobody knows what that situation really is. When they stopped Brooklyn Bourne from regulating over-the-counter derivatives, they created a monster, and nobody knows the consequences. To repeat myself, the only reason we don't have a hyperinflation is the money is locked up in the banks, and maybe it can stay there. I just don't know. These are new situations never before been experienced, so we don't have any basis on which to predict. I myself haven't the foggiest idea of the implications of all these massive derivatives. The sums are just mind-boggling. They're mind-boggling. Mm-hmm. And if you add up the derivatives of the 4 or 5 biggest banks, there are a multiple of world gross domestic product. What does that mean? I mean, nobody's ever heard of any such thing. And we do know that so much debt is leveraged to extraordinary circumstances. I mean, the equity is leveraged. The equity is leveraged to an extraordinary amount with debt, 30, 40 to 1. So how does this stand? I mean, how long does something like that survive? What happens? So I don't think there are any answers. I don't know them. Nobody knows them. I don't know anybody that knows them. Certainly the Fed doesn't know. The Treasury doesn't know. Economists don't know. Mainly they just deny there's a problem. Look, when the President of the United States can stand up in front of the whole world and tell the most outrageous lies, and nobody says, "You stupid bastard, what are you lying to us like this for?" Then you can have all kinds of deception and financial information as well. So I suspect that what happens will not be anticipated. Whatever the black swan event is will not be seen. Just one day there'll be a crisis. Half of them will be denying that there is one, and most of the others will be blaming it on the enemy, and no one will be able to deal with it. And to the extent of my knowledge, there's no policy that can simultaneously deal with hyperinflation and massive unemployment, because the traditional response to unemployment is to create money. But if you've got a hyperinflation, you create money, you get a worse hyperinflation. And if you try to deal with the hyperinflation by curtailing the money supply when you got massive unemployment, then you are going to have worse unemployment. So I find the situation that we're headed toward to be unsurvivable.
So, Dr. Roberts, one of the questions that was sent in by our listeners, and it has come across my mind as well, too. You've been outspoken as you courageously report on today's geopolitical reality. With this in mind, are you concerned about retaliation on you personally? Do you fear for your life?
Well, I sometimes think about that, and a lot of my readers write me and ask me the same thing. I think that the government is focused on activists, and I'm not an active participant in organizing resistance. I provide information, but so do others. But the information I provide is not leaked to me. So I'm not in the position of Julian Assange or Edward Snowden, who were provided, rightly, in my view, with classified information withheld from the public that should not have been withheld, and they made it public. See, the government can always respond to me just by saying, oh, he's a kook, or he's a conspiracy theorist, he doesn't believe it's on 9/11, or he's just an old man now and he's dissatisfied. I mean, they could, but the trouble when you have leaked information, you've got the documents, and they can't say this is a lie, or that this is made up,
right,
or that this is wrong. So they're more focused on the people who can really damage them. Now, by providing alternative information, I mean, I have a huge readership. It's at least in 40 countries. It's translated into many languages. I'm constantly on foreign broadcast. I have a tremendous number of interviews every month, both here and abroad, and that's because of Skype, and communications. But there are other people who tell the truth too. I'll get more worried when they shut down RT, the British banned Press TV from England. When the U.S. makes Canada, if Canada hadn't already, shut down RT. When they start equating not just protesters with enemies of the state, people who have a different story than the government, as enemies of the state, then I'll be more concerned. But you see, I'm quite old now. I'm 75 years old. It's difficult as long as the neoconservatives are trying to claim Ronald Reagan. It's hard to go beat up on a Ronald Reagan assistant treasury secretary, particularly with all the commendations I had from Reagan. So I think I might not live long enough to have to be worried. But if I was 40 years old, I couldn't expect to get away with this for the rest of my life.
Well, the only thing I can say to that, sir, is that we hope for the rest of your days you continue to do what you do and tell us the truth, because it's very hard to get the perspective that you have, being on the inside for some time in your career, and now being there to give us the truth. And we really appreciate what you're doing, and likewise being with us today and speaking on the Ask the Expert here on Sprott Money News.
Well, I appreciate your support, Jeffrey, and wish you much success in carrying the messages.
Thank you, sir. And to our listeners, thank you for joining us today. This is Jeff Rutherford for Ask the Expert here on Sprott Money News. Have a good day.